You are listening to The Vocal Technologist. Spoken tech for your ears.
Welcome back. As your vocal technologist, I'm ready to jump into the financial fray today because honestly, there's a lot shaking up. We're talking everything from who actually issues your credit card to, well, potentially brand new ways money might move around in the future. It's quite the evolution.
It really is. And we're not just seeing small tweaks here and there. These feel like fundamental shifts, wouldn't you say?
Absolutely. You've got these huge established players kind of changing lanes, rethinking things.
And at the same time, there's this new tech quietly bubbling up, laying down tracks for maybe entirely new systems. Legacy meets innovation, basically.
Exactly. So our plan today is simple. Get you quickly up to speed on the really impactful stuff. We'll hit those surprising credit card swaps, some crucial regulatory moves that maybe flew under the radar, and this quiet rise of new payment tech.
Yeah, hopefully giving you those aha moments about where things might be headed next with your finances.
Okay, let's dive right in. The big one everyone's talking about, JPMorgan Chase. They're reportedly in advanced talks to snag the Apple Card program from Goldman Sachs.
And this is no small thing. We're talking, what, $20 billion in balances?
$20 billion. It's got to be one of the biggest card portfolio handovers ever. Apparently, Goldman kind of struggled. High subprime exposure, maybe?
Yeah, that seems to be the word. Lending to riskier borrowers, plus those no-fee policies.
Yeah.
It probably squeezed their profits pretty hard.
It's a good reminder that even the giants need to get the basic math right, you know?
Totally. And it fits a bigger pattern, actually. Look at Bilt. They're dropping Wells Fargo, moving to cardless in 2026.
Ah, right. The rent rewards card.
Exactly. And notice their shift. They're bringing in annual fees for the new cards, expanding beyond just rent to mortgages, HOA fees.
Trying to make it profitable this time. Wells Fargo supposedly lost millions a month on it.
That's the report. So Bilt's clearly aiming for a model that actually, works financially.
So the free lunch might be ending, huh? Even for rent points. But okay, contrast that with Ramp, the FinTech. Huge valuation, $22.5 billion, tons of funding.
$1.9 billion equity raised. They're doing something different.
Completely different. Their whole pitch isn't about rewarding spending. It's about building a product that saves businesses money.
Which sounds counterintuitive for a finance company. Right. But it works.
Apparently. They're talking like 99.93% retention, positive cash flow, plus using AI for fraud detection, approvals. Pretty slick.
It really highlights this shift towards provable value.
Yeah, so for you listening, the big takeaway here, that whole growth at any cost era, it seems like it's fading fast. Profitability, real customer value, smart tech, that's the name of the game now for credit and business finance.
Exactly. That pressure is reshaping everything, which actually leads us nicely into the next topic, regulation and new financial rails.
Yeah.
Because that same pressure is driving change there, too.
Oh, yeah, this stuff is fascinating. The CFPB, remember they had that big 2024 open banking rule? Well, they're planning to substantially revise it now.
After quite a bit of industry pushback, right?
Yep.
Especially on data access fees.
Yeah, lots of debate about whether they overstepped a bit.
But while that's happening, there's this other, maybe quieter, but kind of seismic shift from something called the Genius Act. Did you catch this?
I saw bits. It introduced a framework for permitted payment stablecoin issuers, PPSI.
Exactly. PPSI. It basically creates this new federally overseen path for non-banks to issue stablecoins and move money. Think of it as a third option alongside, traditional banks or getting state money transmitter licenses.
Okay, so a federally blessed lane for stablecoin issuers. That sounds significant.
It is. Now, it comes with strict standards, redemption, audits, oversight, all that. But the key thing, it enables programmable payments on blockchains.
Meaning it could potentially bypass the old slow banking infrastructure?
That's the idea. Faster setup, maybe lower costs, 247 settlement.
Yeah.
You're laying the groundwork for potentially a whole parallel financial system running alongside the existing one.
Wow. Okay. Is this just theory, though, or is it actually happening?
Oh, it's starting to connect. Look at FIS, big financial tech player, partnering with Circle to let banks use USDC stablecoins.
Right, USDC, pegged to the dollar.
And JPMorgan, even they struck a deal with Cranebase to link bank accounts and crypto wallets. So you're seeing these bridges being built between the old and the new.
So the really interesting question for everyone listening is, how might this new plumbing change how you send money or get paid? Could it really be faster, cheaper?
That's the multi-billion-dollar question, isn't it?
Okay, so we've covered a ton of ground today. Huge shifts in credit cards, JPM stepping in, Built changing course, Ramp finding a different path.
Right. And then this whole foundational re-architecting happening underneath with stablecoins, PPSI, new regulations.
It feels like things are moving incredibly fast.
They really are. And as you layer in things like AI getting better at automating finance, these new payment rails actually getting built, market forces pushing everyone to adapt.
It leaves you wondering.
Yeah, the final thought is really, how is your financial life, your choices going to evolve in this future? Because it's being built right now, sometimes quietly, but definitely quickly.
Spoken Tech for your ears.